to the stock market morning prep video for Tuesday, July 29th. Markets actually recovered most of its losses. Dow Jones at one point was down 66 points, ended up closing positive, up 22. Nasdaq well off its lows, down 4.5. S&P up 57 cents, and the Russell down $5.22. Again, well off its lows. Markets actually started to sell off and then kind of recovered right around 10:15ish, and then pretty much grinded higher all day. We have the non-farm payroll numbers that come out on Friday, and then you have, don't forget, mutual fund inflows, usually beginning of every month. So my guess is that you still have to be a buyer of dips and look for stocks that are basing, that have already sold off whatever would be prior to maybe an earnings announcement, a downgrade, and breaking out of a base higher, and stick with that trend, because I think that's going to be the protocol for the next couple of weeks. Now, why? Well, we are so close to the 2000 mark, 1990, 96, 2000 area in the S&P. I do think that we probably get there or close enough that we nearly touch it, and then I think the markets would probably sell off, getting a lot of longs in at these levels, because remember, the markets are made to fool the masses. So that's my interpretation of what I think is going to happen. I think we can get there by next week, meaning Monday or Tuesday, with the help of the mutual fund inflows coming in late Friday, maybe Thursday, starting out Thursday, Friday, and then Monday, pending that there is no dramatic change in the job numbers coming out on non-farm payrolls at 8:30 Eastern Time on Friday. So that's what I think you need to do. You'll see some weakness in between, but I think the weakness needs to be bought. Again, it's a stock picker's market, but if you can pick the right stocks, you will be rewarded. Now, remember, being a stock picker's market, sometimes there's less things to do because we don't have the pent-up volatility anymore. There's no volatility in the marketplace. But if you can put 1, 2, 3 good trades in a week, you could still make some good money. It's a lot more work to do, but and there's a lot more patience involved by sitting on your hands. So let's take a look at a couple of things here. Again, not going to sugarcoat it. I do suspect the markets to grind a little higher, obviously pending no shock announcement coming out of Eastern Europe or Iraq or Israel. It's just something that I do think that it looks like, it looks evident that the market wants 2,000. Once that happens, though, I do think that the markets are paused and are at great risk for a downside reversal. Now, remember, it's just conversation. We need to see the markets actually put in a lower high or make that capitulatory high and then start to move lower, making lower lows and lower highs on volume before we could call any type of top. You'd be a fool to call a top right now, but I do suspect that things are brewing, and I could see the markets in the next 4 to 6 weeks looking for some downside pressure, okay, getting ready for that fall sell-off. Now, does that mean that if we sell off now in August, that we don't sell off in September, October? It's possible. The markets are usually vulnerable in the end of September, October. But we also didn't have that for the last couple of years because of the Fed pumping in liquidity into the marketplace. So you also have to keep that in mind. Now, obviously, when you're day trading, it's a little different, but you still want to know what's going on around you so you can carefully adapt and change your trading style when need be. Okay? You also don't want to be long stocks in intraday and realize that something has happened abroad and now you're just a deer in the headlights. So you have to be quick with this. This is important now because I do think the markets are brewing for a big move. Now, does the big move mean up to 2,000? That really isn't a big move. Maybe you might get a melt up for a day, day and a half, and then I think the market reverses. But we'll see. I'm not willing to put money on it, so that means I'm not willing to go short the market and be short. But I will quickly and adapt to change intraday where I could get aggressive either way. Okay, so let's take a look at the S&P with the average true range. This is a good gauge of volatility. This has been a long time indicator, the average true range, and a lot of people like using this versus the VIX because the VIX has literally just died. So I like using the ATR, and again, we're okay as long as we're not spiking like this, and we're fine. So right now, this indicator is telling me nothing really new of what I want to be looking for. Now let's look at what are the stocks doing under the hood. Well, as you know, I'm a big fan of the stocks above the 50-day moving average, especially in the S&P. This is an area where the markets would generally start to sell off or show some weakness. And sure enough, the last few days, the last 5 trading days, we've actually rolled over. And as you can see here, 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 I mean, just go back and look, the markets have literally sold off. So markets are making new highs, stocks are not. Let's take a look at the NASDAQ. Stocks above the 50-day moving average, same concept. Markets are moving higher and the NDX is not. So you have to be careful here, especially if you're a trader of the Qs or the NQ, which is the future of the NASDAQ. You have to be very careful because we are rolling over again. So stocks are not supporting the index's move. Okay, so let's just keep that in perspective. Now, let's take a look at the index itself. Bonds. Let's go to bonds. Bonds. I would love to buy TLT. Now, this is the future, but I would love to buy TLT into the 20-day or even into the 34-day, and let's just take a look at what TLT looks like. Pretty much the same picture, if you could see. So I would like to see TLT get right into this area here, the 20 or the 34-day. Is it going to happen? It sure doesn't look like it for now. Don't chase it, and I definitely wouldn't be buying this here at this area, okay? But yeah, the 20-day would be my first target for maybe a third or a quarter of a position, and then add a little bit here, and then look for that big move up. Let's take a look at the ES. ES did okay today, but again, we're above the 20. We did break below that, but we're above the 20. One of the indexes that are above the 20-day moving average, so still kind of grinding higher. Now you see the volume, the candlestick, is getting a little bit larger, meaning volatility is starting to pick up a little bit at these areas, and when that happens, usually the price is saying to us as traders that we're ready to vacate the area. So whether it goes higher first and then lower, my guess it goes higher. 1996 to 2000 is the first shot of the ES. Diamonds, it actually really was taking on the chin today. Broke the 20 on Friday, broke the 34, tagged the 50, and managed to close above this lower trend line of this big bearish rising wedge pattern. So watch the diamonds. Now, it is a lagger, but again, if you have the Russell breaking down, and now you have the diamonds breaking down, and now you look for another sector, maybe like the transports breaking down, that is your cue that we have market divergence and market weakness. So we have to be very careful adding to long positions or even being long for a swing trade. Day trade, different story, obviously, because you're out at the end of the day. IWM Russell 2000, great gauge of risk. As you can see here, this is not a pretty picture. This is not a pretty chart. If I was long the Russell, I would be very, very nervous. We broke this bear flag. We broke this bullish symmetry, now making lower lows and lower highs. And basically, we're at the 200-day moving average. So we need to be very careful. I am watching this 200 very closely. And then, of course, this main pivotal low back from May. If we break that, I think the markets will recognize what's happening with the small caps. And I think that, if at all anything, would trigger a market sell-off. Why? Russell is a good gauge of risk, number one. When the Russell is happy, the markets are happy. Okay? Why? Well, it's small cap and it's more riskier to invest. So when investors feel giddy, so to speak, they will invest and take on more risk, meaning more reward. But when you don't have this and you have the breakdown, you have to be careful. Even if you're a day trader, you need to understand what is going on in these indexes. Because if you look at the Russell intraday and we do break higher in the morning and you're looking to get long and all of a sudden the Russell reverses, the other indexes are going to take notice. You need to protect your long position. And that's basically how I'm looking at things. Transports broke down again this morning. As you can see, remember I mentioned yesterday, watch these areas. We have pattern recognition here, lower, here, lower, here, and here. You cannot deny the fact that it likes to sell off every time it hits new highs. So it's doing that now. Does it get to this pivotal low that I'm looking for? I really don't know, but at least take a look at that 34 and that upper end of that middle trend line support here, okay? But again, transports are starting to get a little soft. that's going to help fuel any market sell-off here. And lastly is going to be the Qs. The Qs have been very well bid up because of Apple being, it is one of the heavily most weighted stock in the Qs. So it's going to keep this buoyancy, if you will, in the Qs in this sector. Technology, what's surprising to me is the fact that the Qs have actually held this 20-day moving average when the SMHs, which is the semiconductor index, is really taking it on the chin. So that's something that that we're going to be watching closely as well. Hope it helps, guys. Again, I'm not looking to sugarcoat anything. I'm just saying it is a little slow. However, I'm going to kind of point out key points of charts, sectors, indices, just to keep everybody alive, same side of the trade, until we notice some significant change to the upside and that we may be headed lower. And when that happens, you guys will be the first to know.